Good morning, everyone. It's a fine, chilly Monday morning, and welcome to our weekly market outlook with me, Geoffrey Gishanga, educator and market analyst at Scope Markets Kenya. So, welcome to this weekly market outlook, where I get to look at the fundamentals that happened last week and their trading implications on the various markets and what we expect for this week. So what we had last week, we had the AUD releasing their monetary policy statement. We had the USD Consumer Price Index, which is the CPI, measuring the rate of inflation. We also had the USD PPI, that is the Producer Price Index as well, happening within last week. Then also last week was very significant because we had President Donald Trump meeting with Russia's President Vladimir Putin. And that was definitely talk about the geopolitical tensions and also the way forward in terms of the Russia-Ukraine war and how it affects the trade supply between the two countries. And also we also had earnings from Cisco. So we are going to have a look at all that right here in this weekly outlook. So walk with me till the end and welcome on board. So as we start off, we had the Reserve Bank of Australia released their monetary policy statement last week, whereby the board reduced the monetary policy statement they reduced the interest rates by 25 basis points all the way down to 3.60%. So the inflation trends for that, we had the trimmed mean inflation eased to 2.7% year on year in the second quarter of 2025, down significantly from the 2022 peak. Then the headline inflation came in at 2.1%, partially influenced by temporary cost of living relief measures. So the outlook is that the updated Reserve Bank of Australia forecasts indicate that underlying inflation will moderate toward the midpoint of the 2 to 3% target range, with interest rates expected to follow a gradual easing path. So the implication is that the Reserve Bank of Australia's move signals confidence on inflation, with signals confidence in inflation moderation while supporting employment and growth. So the Australian economy has been on a very steady trajectory. So the move by the Reserve Bank of Australia signals confidence in inflation and moderation while supporting the growth and employment of the economy. Okay. Then next up comes the Consumer Price Index. We had the CPI release last week as well. So the Consumer Price Index, we had the CPI monthly increase was a positive of 0.2%, seasonally adjusted. Then the annual CPI growth was a positive 2.7% year on year. The key drivers for that are, we have the shelter index rose a positive of 0.2%, contributing most to the monthly gain. Then the food index was flat overall, so rose by a positive of 0.3%, while the food at home fell at negative 0.1%. So the key takeaways from that: inflation remains modest and well within the Fed's comfort zone, keeping a potential September rate cut on the table. So remember, there has been talks about having a potential rate cut in September, because during the last FOMC meeting, we had the Fed maintaining their rates. So, and remember, since President Donald Trump took office, he has been applying pressure on the Fed Chair Jerome Powell to actually cut the rates for a very long time. But the Fed Chair has remained firm and steady about not cutting rates. But however, as the pressure keeps mounting on him as well, and also most of the board members of the Fed are also geared towards looking at voting for a potential rate cut during the September the next Fed meeting. So let's observe and see, will they maintain their rates or will they get to cut their rates in September? So also there has been piling pressure on by President Donald Trump again to have the Fed Chair Jerome Powell out of office. So again, it's also something to closely observe. Last week there was a point within last week where he mentioned that he has several names that he is vetting, and looking forward to see which one will be suited best to replace the Fed Chair Jerome Powell. So there have been looming talks about either firing him or replacing him. But as the days progress, we will be able to tell from President Donald Trump mentioned last week about having 3 to 4 names. Will he confirm that he actually wants to replace the Fed Chair Jerome Powell with someone else? So that is also something to closely observe as we look forward to the Fed either maintaining or cutting their rate in September. So let's see, will that rate cut find Jerome Powell still as chair, or will it find a new Fed chair? So let's be patient and wait for that. Then we had the Australian labor market update. So we had the unemployment rate for July 2025 for Australia. So that in terms of trend, we do have the unemployment rate was steady at 4.2%. The participation rate rose to 6.7%. The total employment was 14.66 million, and the monthly hours worked increased to 1.98 million. So the seasonally adjusted terms, the unemployment rate was at 4.2%. Full-time jobs increased by 60,500, while part-time roles declined by negative 35,900. So the Australian labour market remains resilient, with strong full-time employment gains offsetting part-time job losses. So just like I had mentioned previously, the Australian economy showing quite a bit of steadiness and growth as well. Now coming into the US Producer Price Index, the PPI, usually happens the same week with CPI. So we had the CPI, then the PPI followed right after. So for the PPI, we had a positive of 0.9% month on month, which has been the largest since March 2022. Then the annual PPI growth has been a positive of 3.3% year on year. And that again is the highest since February 2025. So a breakdown of that is that the final demand services rose positive of 1.1%. The final demand goods increased by a positive of 0.7%. The core PPI was a positive of 0.6% month on month and a positive of 2.8% year on year. So the rising PPI highlights persistent cost pressures at the producer level, which could feed into future consumer prices. Okay, so it reflects on the pressures of the cost pressures at the producer level. Remember, this is a producer price. This is a producer price index. Okay, so then we do have the U.S. labor market update. So for the U.S. labor market, we had the weekly unemployment claims. So the initial claims were 224,000, which was a drop of 3,000 from the previous week. Then the 4-week average, we had the 4-week average was 221,750. So that is an additional of 750 from the previous week. So the jobless claims remain historically low, signaling labor market strength despite ongoing disinflation. So you get to see the claims, the unemployment claims keep going lower. So meaning that more people are getting employed, more people are getting jobs in the U.S. in the U.S. Then you have the U.S. retail sector. So monthly sales, we have 726.3 billion for $3 billion. Then the change is a positive of 0.5% month on month and a positive of 3.9% year on year. Then June's growth revised higher from 0.6% from a positive 0.6% to a positive 0.9%. So the insight is that the U.S. consumer spending remains robust, reinforcing economic resilience ahead of the holidays season. Then you have the geopolitical developments. Now we had the U.S. President Donald Trump meeting Russia's President Vladimir Putin. Now taking it back to 2023. the ICC had issued a very stern arrest for Russia's President Vladimir Putin on crimes against on crimes against humanity. So there was the global arrest warrant for Russia's President Vladimir Putin. Then now, 2 years later, we are seeing the U.S. President Donald Trump meeting with Russia's President Vladimir Putin at Alaska. That happened last week, and we saw that the U.S. envoy Steve Witkoff confirmed that Russia's agreement to allow the U.S. and Europe to provide Article 5-like protection to Ukraine. So the Article 5-like protection is whereby the NATO's Article 5 obligates all members of NATO to defend any ally under attack. So there has been talks of having Ukraine. I mean, having Ukraine in NATO, but also Russia does not want that to happen. So during having these talks, so this represents the first major security concession from Moscow since the war began, and having that confirmation of giving to provide the Article 5 like protection to Ukraine. So will they get to an agreement on that? It has not yet been confirmed whether President Donald Trump and Vladimir Putin got to an agreement on that, but that is the discussions have been along those lines. So this could have a potential de-escalation of the war, could reduce global geopolitical risk and ease commodity market volatility. So remember again, Ukraine is also one of the largest hotbeds of major commodities like wheat globally. So once they come to an agreement on that, then a de-escalation of the war could reduce the geopolitical risk and also ease commodity market volatility. So the commodities market will also now be able to recover from the surge that it has had, probably due to the war between Russia and Ukraine. So let's wait and see. Will that lead to actually a peace? Will that lead to a peace? Are we going to see the end of the war coming soon? Are we going to see peace between Russia and Ukraine? Are we also going to see good trade? Are we also going to see good trade terms between Russia, Ukraine, or Russia and the US? So this being the first meeting that President Donald Trump and Vladimir Putin are having physically. So will that gear towards peace and good trade deals? So let's wait and see how that unfolds in the long term. Then we had corporate earnings on Cisco. So the earnings for Cisco, we had the earnings for Cisco are as follows. Cisco systems are as follows. So the earnings per share was at $0.99 adjusted versus the $0.98, the expected $0.98. The revenue was $14.67 billion versus the expected $14.62 billion. The growth was a positive 7.6% year on year, and the net income was a positive 30% year on year to $2.82 billion. The guidance is that we have the Q1's earning per share forecast was at $0.97 to $0.99. And for 2026, the earnings per share projected is $4 to $4.06 with a revenue of $59 billion to $60 billion revenue. So the outlook is that strong execution and upbeat guidance reinforces Cisco's stability in the tech infrastructure space. So let's see, will they be able to match their expected earnings per share and their expected revenue growth as well by 2026. So let's wait and see how that goes out for Cisco. Then you have key events to watch out for this week as we start off the week today, 18th, all the way to Friday, the 22nd of this week. So starting off this week, we do have the Canadian CPI on August 19th, that is tomorrow. Then on Wednesday, August 20th, we do have the Reserve Bank of New Zealand releasing their monetary policy statement. So forecasts have it that we are looking at a potential rate cut by the Reserve Bank of New Zealand from 3.25% to 3%. So let's say, will we see a potential rate cut from the Reserve Bank of New Zealand? If so, then how does that affect the New Zealand dollar? And how does that affect all pairs that are paired to the New Zealand dollar? Then you have the British pound CPI. So we do have the GBP CPI year on year also happening on Wednesday. And also the same day, we do have the US FOMC meeting minutes. So these are minutes to discuss what had been talked about during the previous FOMC release. Then you have on Thursday, August 21st, we do have the Euro manufacturing PMIs. We do have the US manufacturing PMIs. We also do have the GBP manufacturing PMIs. So, and also we do have the weekly unemployment claims happening on the same day, that is August 21st, that is on Thursday. Then lastly, on Friday, we do have the Fed chair speaking on Friday, August 22nd. Ending the week, we do have the Fed chair speaking, and also we'll be having the Jackson Hole Symposium happening on the same day. So the Jackson Hole Symposium will be happening that Friday and also on Saturday as well. So let's see what will occur, because also the Fed chair, Jerome Powell, will be speaking during that Jackson Hole Symposium. So the global economic outlook shows disinflation progress alongside the resilient labor markets. So the corporate earnings continue to surprise to the upside, while geopolitical tensions may see a turning point with the US and Russia concessions on Ukraine. So let's wait and see how the long term goes out for Russia and Ukraine, and also the US. And also let's wait and see how the events for this week unfolds. So as we start off the trading week today, I wish you all a very great and productive week ahead. Let's stay blessed and stay financially literate. And looking forward to seeing you on the next one next week, same time, same place.